Welcome to the channel. If you want to grow your wealth and your income, this is the channel for you. You're a host, and every day we make money moves together. So if you like this video, smash that like button and subscribe to the channel. So let's talk about the first way that your credit score affects your financial future. Your credit score is one of the most important numbers in your life. It can affect whether or not you get approved for a loan. It affects the interest rate that you're going to pay on that loan. And it affects even other things, like whether or not you get approved for an apartment. And so today, we are talking about how your credit score affects your financial future. I have a free guide for you called the 7-Day Wealth and Success Blueprint. Link in the description below. Your credit score can impact whether or not you're approved for a loan. If you have a low credit score, it shows lenders that you may be risky to lend money to because your history has shown that you don't always pay your bills on time. Now, there are some lenders out there that actually cater to people who have lower credit scores. But when you apply for a loan, they run your credit. And if your credit score is below a certain threshold, they're just not going to approve you for the loan. Many landlords use credit scores as a way to screen potential tenants, because it can be an indicator of how likely you are to pay rent on time. If you have a low credit score, you may have trouble finding a landlord who is willing to rent to you. And even if you do find a landlord who is willing to rent to you, they may require you to pay a larger security deposit or to pay rent for the first month and last month up front. Now, it depends on what kind of loan you're applying for. There are ways to improve your credit score, and it doesn't take long. I literally upload videos every single week about growing your wealth and your income. So there is a ton of valuable information that you do not want to miss out on. You can see improvements in your credit score within a few months of starting to work on it. You don't have to pay anyone to do it for you. You can do it all yourself. If you're applying for a mortgage, typically you want to have a credit score of at least 620 in order to get approved. But different loans have different requirements. The second way that your credit score affects your financial future is that it can affect the interest rate that you pay on a loan. If you have a higher credit score, it shows lenders that you're less risky to lend money to, and so they will offer you a lower interest rate. On the flip side, if you have a low credit score, lenders see you as more risky, and they will charge you a higher interest rate. So here's what that looks like in practice. Let's say you wanted to buy a car, and you needed to finance it. You go to the dealership, and you get pre-approved for a loan for $30,000 at 4%. That means that the dealership has agreed to lend you $30,000 at an interest rate of 4%. Now let's say that you have a friend who has a higher credit score than you do, and they go and get pre-approved for a loan for the same exact car. They might get pre-approved for the same exact loan amount, but at a lower interest rate. Maybe they get a 3% interest rate. Now you both end up buying the same exact car over the same loan term. But your friend ends up paying $3,870 less in total by going with the lower interest rate option. This example illustrates how much of a difference a higher credit score can make when it comes to the interest rate that you pay on a loan. Now keep in mind that this is just one example, and your actual results may vary depending on your individual circumstances. But hopefully it gives you an idea of the potential savings that are out there if you were to increase your credit score. Now let's take it up a notch and talk about the real estate example. In addition to impacting the interest rate that you pay on a loan, your credit score can also impact the terms of the loan that you get. For example, if you have a low credit score, you may not be able to find a lender that is willing to give you a loan with a term of 30 years. You may only be able to find lenders that offer you a 15 or 20-year loan term. Now, this could potentially add hundreds of thousands of dollars onto the total cost of your loan because you're paying it off over a shorter period of time. Additionally, if you have a low credit score, you may not be able to find a lender that is willing to give you a loan with a fixed interest rate. You may only be able to find lenders that offer you an adjustable rate mortgage, which means that your interest rate will fluctuate over time. Now, speaking of fluctuations, another way that your credit score can affect your financial future is by affecting your ability to get a credit card with rewards. So credit cards with rewards can be a great way to earn points, miles, or cash back on your everyday purchases. However, many of the best credit cards out there require you to have a good or excellent credit score in order to be approved. For example, the Chase Sapphire Preferred Card requires you to have a good credit score of 670 or above, while the American Express Platinum card requires you to have an excellent credit score of 800 or above. Now, if you are not approved for these types of cards, you may end up with a card that has a lower rewards rate, which means that you'll earn less points, miles, or cash back on your purchases. And then finally, another way that your credit score can affect your financial future is by affecting your ability to rent an apartment. Here's the thing. Your credit score doesn't have to hold you back from achieving your goals. If you are new here and you like what you see, make sure to hit that subscribe button. Also, if you want my help in growing your wealth and building your business, do not forget to check out the free guide. Thank you guys so much for watching, and I'll see you in the next video. Bye.